Well, I think we are live now. And welcome to our first webinar of the series of virtual events on best practices for VAT models that a BDF, Associação Brasileira de Direito Financeiro, IFA's Brazilian branch, will be promoting within the next few weeks. As many of you already know, the Brazilian Congress is currently discussing a tax reform that might implement a VAT in Brazil. Those familiar with the complexity of the Brazilian tax system, especially related to consumption taxation, will also know that this will not be an easy task. The vices of our current system and the need for a broad tax reform have been fiercely debated in Brazil for decades. Our consumption taxation is fragmented into several taxes levied by different taxing entities at federal, state, and municipal levels, and involves diverse and oftentimes superimposed taxable bases. This makes an effective tax reform a huge political challenge, with taxing entities and different industries fighting for the best deal. Our already scorching tax burden does not make this any discussion any easier. Changing the taxation of the financial sector is something very sensible, and shaping a VAT for the financial sector in Brazil will certainly be a challenge, as it has been and it is still a challenge in many countries. A BDF, IFA Brazil, has always been at the forefront of all taxation and tax policy discussions taking place in Brazil. The analysis of a potential VAT could not be different. And that's why ABDF, IFA Brazil, is very proud to have invited for today's discussions the most well-known experts on the subject. We hope to learn from them, from their experiences, from other countries' experiences, whether good or bad. So now for that journey, I would like to introduce our guests, starting with Professor Des Gruger. Professor Des Gruger is a consultant in the tax practice at Weber Wetzel. Amongst his several titles and prizes, he holds an International Tax Program certificate from Harvard and an LLM degree also from Harvard. And I would like to present Professor Giorgio Beretta, who has an advanced master's degree in corporate tax law from Bocconi University in Italy, and an advanced master's in international tax law by the University of Amsterdam and IBFT in the Netherlands. Giorgio is a PhD in tax law at Università Carlo Cattaneo in Milan, Italy, and he currently works at PwC in Milan, Italy. And then I would like to introduce Mr. Bernardo Api, who is a director of CECIF, which is a tax policy think tank in Brazil, highly involved with the drafting of tax reform proposals, including one of the main tax reform proposals currently being considered by the Brazilian Congress. Mr. Api has occupied several relevant positions in the public, in the private sector in Brazil, and be important to highlight the years he spent as Secretary of Economic Policy for the Ministry of Finance in Brazil. And finally, I would like to introduce to you Mr. Décio Porchat. He's an Executive Director at JP Morgan, Brazil, as well as a Director for Tax Issues at the Brazilian Federation of Banks, FEBRABAN. And before I invite our first speaker, I would like to thank Melina Lukic, who is a course director at the York University. I would like to thank her for idealizing and coordinating this series of events with IFA Brazil. Without Melina, this extraordinary virtual pocket VAT conference would not be happening. So I would like to ask Melina to say a few words before we start.
Thanks, Carolina. Good morning, everyone. I just want to say one more time, thank you very much to all the speakers and discussants for your time to present here today, and also for all the audience watching us now. Also, I'd like to thank IFA Brazil, a BDF that promoted and made this webinar series happen, especially the president, Gustavo Brigagão, and also Daniele Brigagão, and all the BDF's team that for all the assistance with the organization. And a special thank you for Ana Carolina that kindly organized this event with me. As mentioned by Carolina, this webinar, the idea of this webinar is to learn more about the best practices and international models of VAT GST. Specifically today, we want to learn more about the experiences in European Union and in South Africa, and to see what worked, what didn't work, what the problems are, and how all these experiences can help Brazil to hopefully implement a VAT GST system in the near future. So just a reminder, we have a video here that we have 3 more sessions in the next weeks. Next week, July 1st, we have a panel on VAT and digital economy. On July 8th of July, we have VAT GST best practices and international models. And on July 15th, we have a panel about alternatives for tax reform in Brazil. So I think we can get started now. Thank you all. I hope you can join us in the next weeks as well. And thank you again.
So thank you so much again, Melina, and thank you every one of you. I'm sure we'll have a very rich and interesting debate today. And in order to get started, I would like to invite Professor Giorgio to make his presentation to us. Thank you, Giorgio.
Yeah. Okay. Thank you very much, Ana Carolina, and thank you very much, IFA Brazil, for the kind invitation and to present and be a speaker at this important event with many other colleagues and experts. Can you see the presentation, by the way?
No, Giorgio, I think that
okay.
No, we have a blank page.
Okay. I just want to. Okay, let's retry. Can you see it now? Because
we can see your screen, but we cannot see the presentation.
Maybe it's better that another one step in, because I share it, but it doesn't work. It's quite strange.
Maybe Thiago, could you? Is it okay, Giorgio, if Thiago shares?
Yeah. Okay. Can you see it now? Okay. Perfect. So thank you very much for the kind invitation to IFA Brazil and to the Brazilian Tax Association to present and be a speaker at this important event. I just want to actually introduce a little bit myself. I currently work at PwC Italy, and I hold a PhD from Luke University, which is a small university located in Italy between Milan and Switzerland. I just want to express also have this opportunity to express my solidarity to Brazil and to Brazilian people as well for the kind of disease that they are currently facing. And as an Italian, I hope that Brazilian people will be able to overcome this disease shortly. So can we just move on to the agenda, please? Thiago? Thank you. So I decided for this brief presentation to have an introduction of actually of the actual system of taxing of treating the value-added the financial services for value-added tax purposes. And in particular, I will try to present, to divide my presentation into three segments. The first one, I will explain the current treatment of financial services under the current rules. And then I will move to the recurring issue and also the new issues that the current financial, the treatment of under the VAT system of the financial services currently has. And in the third and last part, I will try to explain what are the current options actually for a reform of the current treatment of financial services. Can you please move on, Tiago? Thank you. Okay, but first of all, I would like to give you a very brief introduction actually to European value-added tax system. As you may know, the tax was introduced in 1967, so back in the 60s, actually is more than 50 years. And the European value-added tax is intended to be a general tax on consumption. What does it mean? It means that it has a broad base, because in principle is to, the tax is intended to tax all goods and services. So that's why, in that way, is different from an excise duty, which targets specific products like, alcohol and tobacco, for instance. It is also important to recall that the value-added tax system, the European value-added tax, is a transaction-by-transaction tax, which means that apply on each transaction at the transaction level. So, in principle, given this credential, you may suppose that financial services are also taxes under European value-added tax. This, of course, is not be the case, has never been the case, because in fact, financial services has always been exempt under the European value-added tax system, and in particular, a specific exemption for financial services has been in place since 1977. You may wonder what are the reasons actually behind this special, I would say, treatment, or if you want, for not subjecting to the tax financial services. Well, my PhD mentor, who unfortunately passed away last year, Professor Benterra, used to tell that, the exemption for financial services is one of the big mysteries associated with European value-added tax system. Because in fact, it was never spelled out what are the actual reasons behind that exemption. If you analyze carefully the preliminary works and the legislation and also the study that were undertaken, you may basically find three reasons associated with the current tax VAT treatment of financial services. And they relate to historical, political, and technical reasons. In particular, you may find historical reason in the fact that actually before the introduction of VAT, most of the turnover taxes that were in place in the member states of various EU countries, at that time was only 12 countries that were part of the European Union, and most of the turnover tax at that time used to exempt financial services. And so there was a kind of continuation of the treatment of those services under the new tax. Then there are political reasons, and here, the reasons are I would say, pretty obvious. Insofar as you introduce a new tax, of course, as a politician or as a policymaker, you cannot expect to encounter the favor of your potential electorate. So there was political concern in introduction of a kind of new tax system for financial services. And finally, there are also technical reasons, because, as I said before, VAT is levied at the transaction level, so on each transaction. But in the case of financial services, if you think about, for instance, of many financial services, like, I don't know, the transaction involving the charging of interest or foreign exchange trading income or income from security held for trading, then the revenue for the bank come out as a margin. And there is the need, therefore, to allocate that margin on a transaction level, but there is no clear methodology to do so. So there is the problem of calculation of the taxable base. Can you please move on, please? Okay. So the current treatment, therefore, is exemption. I mean, the financial services are exempt under the current rule. But before, and there is a precise list of financial services that are exempt under Article 135, paragraph 1, letter B to G of the VAT Directive, which contains the relevant legislation at the European Union level. But before getting into that, I just want to give you a kind of also introduction to exemption and how the exemption works under the European value-added tax system. Because, I mean, exemption are you know, a particular animal of value-added tax system, because first of all, it is settled in the case law of the Court of Justice of the European Union. In the slide, I just put an example, but there are many judgments on this matter. But exemptions are to be interpreted strictly, so are subject to strict interpretation, which render the application of an extension of the current exemption to new services that are developed in the financial markets quite challenging. And also important to recall that VAT exemptions are objective and not subjective in nature, meaning that it doesn't matter whether the financial services are provided by banks and other financial institutions or even by third parties. It doesn't matter. The exemption apply if pertain to the financial service sector. It doesn't matter, I mean, the subjective characterization of the supplier. However, there is no definition in the European VAT legislation of financial services. The only things that the court has said is basically that financial services are transactions that are related to the sphere of, I mean, are services that are related to the sphere of financial transaction, which of course is a kind of circular definition and doesn't help that much. Please move on. Can you please move on? Okay, thank you. So what is the current list? What is included in the current list? Actually, there are you know, many services that are included. So starting with letter B, letter A, by the way, is reserved to insurance services. Letter B relate to, I mean, exempt from the value-added tax, the granting and negotiation of credit. But you have also, I mean, the court has said, the European Court of Justice has said that these apply also in the case in which a supplier authorizes its customer to defer payment for a price, so a return for interest. So also this is, most of the time, is to be intended as a financial services. Then there are credit guarantee under letter C. You may imagine typical example is a bank guarantee. Also, payments, transfer, and current accounts are exempt activities, but here we have a specific carve-out, which relate to debt collection activities. Debt collection activities are actually excluded from the exemption, and therefore they are taxed under the value-added tax system. And also, the court has said that the term debt collection is to be interpreted quite broadly. And therefore, for instance, not only debt collection in strict terms is a tax activities, but also an activities like, a kind of similar activity like factoring is actually taxed under the current rule. Then there is an exemption provided for actually the trade in currency, banknotes, coins, if used as a legal tender. And again, the Court of Justice have given an important pronouncement in October 2015, when basically it said that also the exchange of traditional currency for units of the Bitcoin virtual currency and vice versa is to be intended as an activity fully under the current exemption. Then there is also an exemption for transaction and negotiation in share and other securities. But again, we have a carve out for an activity and specifically for the management of assets under the current system. So for instance, portfolio management of assets by a bank advisor is a tax activity, so is not an exempt activity under the European value-added tax system. And finally, the last point of the list relates to the management of special investment fund. And again, there are kind of restriction to the application of this provision in the sense that, for instance, the court has said in a case that a pension fund is a general investment fund and therefore cannot benefit from the exemption. So please, can you change slide, please? Okay. There are a couple of points more to remark if you want to add to the conversation and to the current treatment actually of the financial services under the system, which relate to the fact that there is actually an option to tax for financial services. I call it, is not in the literature, so it's my very, personal, I would say, definition, is a kind of double option, meaning that the option is to be applied and implemented first by each member state, and then it can opt it in, it can applied by each business. And it appears that is not very popular in the European Union because only 8 countries has currently implemented that possibility under the VAT legislation. They are specifically Austria, Belgium, Bulgaria, Germany, Estonia, France, Croatia, and Lithuania. And also it is important to recall that the implementation of such measure is not harmonized. Because, for instance, if you take in Austria, there is the option, but is restricted to the possibility to apply VAT on those services is restricted to specific financial services, such as the granting of credit and transaction connected with credit card. Whereas, for instance, in France, the option is not available for businesses that are supplying financial services on an incidental basis. Also, the second point, which I would like to mention, relate to the provision of Article 169, letter C of the VAT Directive, in the sense that if the customer is actually located outside the European Union, and it doesn't matter whether he is a business customer or a private consumer, then the financial institution, or at least the supplier of financial services, can deduct input VAT, which relate to inputs to the acquisition, the services and the goods acquired for providing financial services, which is not the case under the current exemption, as I will explain in the next slide, please. Can you please change slide? Okay, thank you. Why I say, because I mentioned the impossibility to deduct input VAT under the current rule, because this is really the focus of the problem of the current treatment of financial services under the present rule. Because if a business is not permitted actually to deduct the input VAT, it becomes, this input VAT that is not deductible becomes an irrecoverable cost for that person, and therefore you basically break a vote with the reasoning behind also the old VAT system under the European Union, which is to tax final consumption, meaning consumption by household, and not to tax instead intermediate consumption. But if a business, so if someone that acquire a services or a good in the provision of, for his businesses, for his economic activities, cannot deduct the VAT that is charged to it, therefore you ended up with taxing intermediate consumption, and therefore you go against the very basic reasoning of the value-added tax system. Lack of VAT neutrality and impossibility to deduct of input VAT are surely two current issues, but there are a number of other issues associated with the exemption for financial services under the value-added tax system, and they relate to the so-called phenomenon of sticking VAT, meaning that the financial institution that, given the impossibility to deduct its own VAT, will pass that cost actually as a price element, as an element hidden in the price that he charged to the customer for his financial services, which therefore means that if the customer is a business itself, he will apply VAT on the hidden also part of the VAT that is included in the price. There are other problems as well. One other relate to the artificial increase in the cost, of course, because of the input VAT, impossibility to deduct the input of VAT, which is charged to banks for financial services, but also an artificial increase in demand of the services, because consumers, since they have not to pay VAT, were more willing to acquire financial services. Another I would say, one of the probably major point right at the moment with the current treatment of financial services relate to the problem of outsourcing. And because there is a negative bias because of the impossibility to deduct input VAT with outsourcing activity by financial institution, and which instead will be more lenient to actually provide those services in-house, because in this way they will be able to avoid to pay VAT without deducting VAT on their services. And also problems are associated with competition distortion. Two kinds precisely of competition distortion may occur. One is between incumbent operators and new entrants, because most of the time incumbent operators are larger banks, which therefore can internalize and provide in-house more and more services than, let's say, small players, which generally are new entrants. So they will be able to gain a competitive advantage in this way against new entrants. And also there is a problem of competition with distortion with regard to EU and non-EU financial operator, because of course if you are a European Union institution, you carry, you have the problem of the impossibility of input VAT deduction, whereas if you are located not in a European country like in the United States, then you don't have the problem of the VAT deduction. Please, could you move on? Oh, thank you. There are also, those are the recurrent issues, but there are new issues coming, with the also developments in the financial sector. And those issues in particular relate to, I mentioned also before, the legal uncertainty between the treatment of new services. For instance, Professor Dennis Weber just yesterday emailed me about a recent case that was, a pending case before the Court of Justice related whether an investment fund, special investment fund, which is managed entirely by means of algorithm, could be included under the current exemption, if you remember, under the list of the current exemption or not. So there is legal uncertainty over the application of the current rule, especially when you come to new financial services. I already mentioned the problem of discrepancy in how the option to tax is currently implemented by member states. Then we have the problem, as said, of new digital services and how to include them under the current exemption or not. And also we have, interesting problem which relate to fintech, startup, and digital companies such as Amazon, Alipay, and Facebook, as long as those players actually have started to develop the payment or the proprietary payment system. For instance, think Amazon Pay, Alipay, or Facebook that has developed Libra system. And in this way, they may be able to be involved in a kind of tax arbitrage, in the sense that they may try to charge more for the fully deductible, the normal services that, provide full input tax VAT deduction, and instead they may decide to charge less for the, exempt financial services. I already mentioned the problem of outsourcing, which is just getting worse and worse with the developments of IT and back office services. And also the same goes for globalization, and because, we are speaking about completely dematerialized services, and also the problem between the stiff competition between European and non-European countries. Then, please move on. Okay, then I move quickly to the last part of my presentation. I will try to highlight the current reforms that are under discussion, or at least under the table at the European Union level. In particular, there was a proposal advanced by the European Commission in 2007, which basically proposed to have more clear definition of exempt services under the VAT directive. But even if I would say this narrow approach proposal was basically rejected by member states, which I recall that you need unanimity among member states to approve a VAT reform under the current European value-added tax rule. And finally, the proposal, after almost 10 years, was withdrawn. So it was withdrawn in 2016. Then a new work stream has started in 2017, especially after the Court of Justice has given two important decisions in September 2017, which relate to the impossibility to apply the cost-sharing agreement to the financial and insurance sector. Very briefly, what is the cost-sharing agreement about? Basically, it's a specific provision under enshrined under Article 132 of the VAT Directive, paragraph 1, letter F, which basically allow companies to acquire services and goods without paying VAT if they are acquiring those goods and services under under a common structure with other business, which other business are part. But again, the Court of Justice of the European Union basically did not permit the use of this provision in the case of financial and insurance sector. Back in June 2019, it started a new study, was commissioned by the European Commission to an external consultant, and the due date of the study is, was before coronavirus kicked in, was in September 2020, probably is going to be delayed a little bit. And basically try to propose, analyze the current problem associated with the treatment of financial services, and also propose option to reform that eventually the Commission may decide to implement. Then we have the last slide with the, could you please move on? With the, could you please move on? Oh, thank you. We have the last slide with the current options that are on the table and that are highlighted by this study with regard to a possible reform of the current treatment of financial services. In particular, there are a number of options, one of which is a entails a legislative revision of the current definition. It could be done either by new binding regulation, or it could also be done by means of the issuance of non-binding explanatory notes. Then a more substantial revision would entail a removal, actually, of the VAT exemption for financial services and the application of VAT on a standard rate or at a reduced rate. Another option could be the introduction of basically going against the ruling of the Court of Justice that I just mentioned, and try to implement enables financial institutions to rely on the cost and share agreement provision, and basically to acquire those services without, input services without paying VAT. Another option relates to the make the option to tax more consistent, in particular render it obligatory for member state is implementation, and also to harmonize the implementation of the option itself. Finally, on the input side, there is the possibility that in order to simplify the calculation of the taxable amount, actually there will be a mandatory or optional fixed rate of input VAT, which is admissible for deduction. Of course, there could be also that, those options should not be viewed as isolated, but could be implemented also, in a kind of combination between one another. And also there is the possibility that actually, in particular with regard option 2, so the removal of the VAT exemption for the financial services and application of a standard or reduced VAT rate, is implemented not for all financial services, but it is somehow tested for a specific services in the industry, such as, for instance, asset and fund management. And so we are at the end of this presentation with the last slide. Could you please move on? Okay, So I just want to thank you all for attendance of the brief presentation, and I look forward to your comments. You may find my reference below in the slide. Thank you very much.
Professor Giorgio, thank you so much for your brilliant presentation. It was brilliant because you managed to give us an overview of the European VAT system, which is something very special for us in Brazil, who we do not have it yet, at least. But you managed in such a short period of time to give us a detailed a notion of the challenges that you are actually facing in the European Union with your VAT. And that's very special for us. At this moment, we are drafting our own system. And now I would like to invite Professor Des Kruger to talk about, to teach us about the South African VAT system, which is a very well-known and very respected VAT model. Professor.
Thank you very much. We'll just wait for the slides to come up. So yeah, just by way of introduction, the way our VAT system has evolved has been very important in the sense that and just thinking about the Brazilian experience at the moment of looking at tax reform. We've had 3 major commissions of inquiry into the tax structure in South Africa over the last 35 years. And I've been very fortunate to be an advisor to all 3 of those commissions in the field of value-added tax. And as a result of these various commissions, that the VAT Act, as we have it in South Africa today, and specifically around financial services, developed. So if you go to the first slide, the first commission, which was established in the late 80s, the so-called Marga Commission, looked into the whole tax structure. At that point in time, we had a sales tax, very similar to the sales tax that you find in the various states in America, very similar. That looked at it and came up with a suggestion of an additive value-added tax, bearing in mind that no other country in the world at that stage had an additive value-added tax system. And in my research, the only place I could find was Michigan, and that it had been adopted in Israel for financial services at one stage. But other than that, anyway, it came out. Obviously, an additive system, you're going to tax production in the country, not really consumption in the country. And, exports would be taxable. So there was government looked at this and, took great fright, and in their white paper rejected it and opted for the usual credit invoice VAT, the old European style value-added tax system. At that point in time, a VATCOM was established to look into the various aspects relating to the proposed reform around the credit invoice value-added tax system. And one of the things it came up with was a recommendation that financial services should be exempt. Now, Giorgio has mentioned the various reasons why people, are advanced for not taxing financial services. But I think the consensus everywhere, and certainly all the literature that I've read and the discussions I've been involved in, there's acceptance that it should be part of the value-added tax chain. It should be taxed. For the various reasons that Giorgio also mentioned around neutrality, around double taxation, fiscal integration, and that sort of stuff. But how to tax it. So and it's the essence of the discussion is why do we not tax interest? Okay. Now it was quite interesting when I was a much younger person and did my master's. The master's thesis was based on the taxation of financial services under VAT and sales tax. And I came to the conclusion that you could tax interest, gives you the right answer. There's certain things that you had to tinker with in the system, but certainly you could tax interest and that would be fine. Anyway, needless to say, nobody's still accepting that, but we'll carry on. I think I've got a good mark for it anyway. So we kind of looked at it and at that stage adopted the so-called New Zealand approach, or what is often referred to now as the modern VAT. And I say modern VAT because with all respects to the European system, it's far too complex in my view. And so what New Zealand did when it sat down, it said, let's simplify everything. And one of the things they simplified to a large extent were also the financial services. So in South Africa, following on the New Zealand thing, we, as I said, nobody really taxes interest, so it's going to be exempt. So we exempted financial services. But what we've done is at this point in time, and you'll see how it developed, financial services, although they would be generally regarded as financial services, and even under the New Zealand legislation, they are not regarded as financial services if there's any fee or similar charge made. So as soon as you can find a consideration, there's absolutely no reason why that should not be taxable. And that certainly is where South Africa is at the moment. So if we, you'll see, if you go to the next slide, I mean, Georgia has also mentioned the various things that are services that are exempt or financial services and their description. You'll see they're very similar. Yeah, it's exchange of currency, payments and collections of debt securities, that, in other words, loan debts and things like that. I suppose the provision of credit's the big one, yeah, and obviously the share transactions are the big ones that are exempt. But as you'll see, that they very much mirror a lot of the exemptions one finds in other VAT jurisdictions. But as I say, the major change came around when, notwithstanding that when we initially adopted on taxation, the exemption of financial services, this distinction of saying, well, if you've got a fee, it's taxable, and it came in at a later date. So if you go to the next slide, you'll see that the second commission of inquiry was the CATS Commission. What's quite interesting about this one, these first two and the third one I'm going to talk to, they're all chaired by judges who thought they were fiscally sound people. But anyway, so Judge Katz was one of the commissions. And you'll see there what they decided was some of the exemptions that we had taken across from the New Zealand legislation. And I might add at one stage, our legislation was 85% word for word, the New Zealand legislation, which I think is a model VAT system and has been adopted in a number of other countries in the world. It avoids a lot of the pitfalls, in my view, of the system we have in Europe, which obviously is easier because you're not dealing with various states, and so you can do things easier in many respects. But they had the agreeing to do arranging the specified activities. They said there's absolutely no reason because these things would always be charged. There would be a fee charged. And the other ones that any other goods or services necessary for the supply. So we immediately got into situations of definitional concerns about, is this now necessary for the supply? Is the cash transit fees amounts that are charged through, is that necessary for doing the financial services? Should that be exempt as well? Payment and collection on someone else's behalf amounts, so debt collection effectively became taxable. And if you go to the next slide, there are other things that were also at that point in time, underwriting, sub-underwriting, the issue of equity securities, guarantees. I noticed in Georgia's presentation that the guarantee story is still there. Now these were taken out, and there hasn't been any problem. We've had no issues around these issues. So it just shows you that often you think of yourself as these things should be, part of the financial services exemption, but having withdrawn them, we've had no issues. And we've certainly had no issues around this concept of if you charge a fee, because people know when you charge a fee or when you are charging interest, where it's the provision of credit and the consideration for that credit, in my view, is interest. Okay, so we've had no issues around the withdrawal of these things. And I think that's important when one looks at, what is a financial service and what should be taxable. So on the next slide, we'll see that a couple of issues still remain. We've had very few cases in South Africa dealing with the financial services. Just the two that I mentioned there. The master currency case dealt with a situation where at the duty-free areas at the airports, there was an exchange of currency for a fee. Now, obviously, that would be taxable because there's a fee charged, as opposed to, I often seen it when we used to be able to travel. Often it would just be a buy and sell rate. Okay, and in South Africa, if there's a buy and sell rate, it's not a fee. Okay, so that would be still exempt. Whereas if you charge the fee, because now you can say, well, this is the fee, that would be taxable. And so the revenue authorities argued it was taxable. The taxpayer argued, no, but the tax-free area is not part of South Africa, and therefore it's an export supply, because I must mention to you, like Georgia has mentioned, that if you provide services, financial services to a non-resident, they're zero rated. So they try to argue that, it was not a South Africa, it was export from South Africa of services, because it was outside South Africa when the services were received by the customer. Went all the way to the Supreme Court, and that was rejected. And then a very recent VAT case, coming back to the exchange of currency, but a different approach now. This is related to apportionment versus direct attribution. So they said, okay, we used to apportion, but we're not going to apportion anymore because we can directly attribute everything. All the fees we earn are earned at our 42 venues around the country. And so the rentals and all that sort of stuff, we can claim. The background where they determine what the margins are going to be and the buy and sell rates, that's not a taxable supply. And therefore, the fact that you might make money or lose money depending on how you're buying and selling foreign currency was not an exempt supply, and that wasn't consideration for an exempt supply. It was just an internal mechanism where they made profits. And as the court said, value-added tax doesn't seek to tax profits, which is quite interesting. So that's that concept of margin versus fees, and that sort of thing. Now, what's interesting to me is this margin versus interest. So everybody will say, no, we can't tax financial services because interest is not consumption, it's investment. And yet, in South Africa, and in most jurisdictions would apply apportionment, and they need to establish a value of the exempt supplies. They all use interest, right? So in South Africa, under our apportionment ratio of taxable to non-taxable, including exempt, you have to determine the values. And the values in all cases, they use interest. So in their minds, in everybody's minds, interest is consideration for a taxable supply or exempt supply, could potentially be for a taxable supply. And yet, for some reason, we say, no, we can't get to this consideration. How do we determine this consideration? And yet, as I say, we do that. And the same thing happens when we say financial services are zero rated. And you declare your zero rating in your VAT return. What are people doing? They're declaring their interest earned as an exempt supply. So it's interesting, just as a way of background. And there's some gray areas, as I said, just highlighted in the recent VAT case, of where you have this question about, do you have an exemption or do you have a margin? What is it that you're earning? And how is that your consideration for your financial services? Or is it, as the VAT case said, merely a determination of your profit, your expenditure and your income? Apportionment is a big issue in South Africa, because not only is it a case of including interest, they also include dividends. What's interesting is that interest, there's a standard apportionment methodology, which takes taxable supplies versus all supply, exempt supplies and everything else, exempt supplies over all supplies. Now, the issue there is that the amount of interest you earn sometimes has no correlation to your expenditure and what your inputs are and that sort of stuff. So what the Banking Association in South Africa has done is they have arranged with the South African Revenue Service a special apportionment method, referred to as the varied input method. So they say, we're not going to look at your turnover, because that's not a good indicator of what your exempt supplies are, or the value of your exempt supplies, to which, in respect of which you must now be denied input tax. We're going to go look at your inputs. So you must tell us which inputs you can say went directly to exempt, directly to taxable, and that which they call the pot, and you apportion the inputs. And then there's various exclusions and interests, inclusions and exclusions specific to the banking industry. So that's quite interesting there as well. But there again, they said, okay, the interest, which would normally be used in your standard method, was inappropriate for the banking sector. Now, Georgia has already touched upon this issue about vertical integration, where it's a discouragement to outsource your stuff because you're going to be charged VAT and it's not relieved, so it becomes an additional cost to you. The other thing is that obviously there's double taxation to the extent that as Georgia put it, the VAT sticks in the financial services sector. Okay, if we just move on to the next one. Okay, the final committee and the final few slides I just want to deal with you. This is a more recent committee. Our final report was submitted about 2 years ago. And it was really fascinating because we were able then to call upon research in relation to other jurisdictions who have made significant changes. We didn't go and look at Europe because we wouldn't want to look at Europe. But there's been some really interesting developments in Australia and New Zealand. And we did look at the UK in terms of VAT grouping. We don't have VAT grouping in South Africa. So we looked at that, and grouping is a big issue, larger than VAT in South Africa. So the Davis VAT Committee, we looked at this once again, and I was still unable to convince this committee that they should tax interest. So they concluded that it should be exempt under the normal rules. But was there something that we could do to alleviate those two major issues that we saw in relation to exempting financial services, especially where the customer is a business? It's the double taxation, cascading effect, and this issue about vertical integration, which is a big issue in South Africa because there's a lot of outsourcing that takes place, and there's specialized outsourcing in industry in South Africa. And that's been discouraged by virtue of the fact that you'd have this VAT, additional VAT cost. So as I say, we looked at the New Zealand, Australia, and UK. In New Zealand, interesting enough, the financial service providers may elect to zero rate. This is internally zero rate the suppliers of financial services to customers who are registered and who have more than 75% taxable suppliers. That's quite interesting. So, but we rejected it. A lot of your input issues and your double taxation issues and your vertical integration issues, because you've got that's significantly a larger amount of zero-rated suppliers. We rejected it because of we saw a huge administrative burden, also not only on the banking sector, but also in relation to compliance with the revenue authorities having to control this. And the question arises: do you do that? You have a couple of transactions with some people, and then they no longer have 75%, or they go to 74 or 73, and then what happens? And that sort of thing. And tax neutrality was a big thing. I mean, then you're going to favor the situation where you'll be supplying some industries, which will be VAT neutral for them then, as opposed to those who are at 76 and that sort of stuff. So, and as I say, we also looked at it, and the feedback from our banking colleagues was that, relative to South Africa, which has a very sophisticated banking sector, New Zealand was relatively small. So that was New Zealand. If we go on to Australia. The next slide, thank you. So they have what they call a reduced input tax credits regime. And that's what that seeks to do, is to address this problem about not being able to claim input tax on your inputs. And instead of looking and saying, who's your customer, identify your customer and be able to prove to the revenue authorities that when you zero rated that transaction by using interest as value, then under those circumstances, let's look at your inputs, which makes it easier because you know what your inputs are. And if we can define what those inputs are that you can claim input tax relief on, notwithstanding that some of those inputs will be used for so-called making exempt suppliers, we will deal with the vertical integration issue. We will deal with cascading and double taxation. And so they looked at the major inputs. You'll see there that transaction banking, cash management services, and on the next slide, the nature of those inputs that were allowed. So you'll see a lot of the issues that may have themselves been financial services at the beginning, when South Africans used it as being necessary or the arranging of or anything like that, they were brought into, we're allowed now to claim input tax. There's a lot of detail around these two so I've just very broadly sketched the two things. But you'll see that it's quite interesting there. I mean, securities transfers, payment and fund transfer services. The previous one was around the banking and cash management services. I'm sure a couple of you yourselves would have driven behind these these trucks that are transporting cash and thinking, well, if only it broke down and the door flew open or something like that. So there's a lot of that, and obviously a lot of costs involved. And so talking to the guys in New Zealand, a significant benefit to the New Zealand, the Australian banking sector and financial services sector. And then finally, we looked at the United Kingdom in the next slide. And we looked at grouping, because grouping can also address a lot of this. It certainly addresses the vertical integration thing and the outsourcing and that sort of stuff, because a lot of banking groups have admin companies, or they have processing centers and all this sort of stuff. So that would have addressed that issue. That's one of the issues that was raised in representations to the Davis Tax Committee. But it's broader than just obviously VAT. And my colleagues looking at the income tax side and on the Davis Tax Committee, we obviously had discussions with them. And South Africa has always been opposed to VAT grouping. They've never been convinced through all those three commissions that it should be, it should be an option in South Africa. There's always a sense that it would lead to a loss of revenue and that sort of stuff. Notwithstanding that, the lack of VAT grouping, group taxation, leads to very strange machinations in groups to try and move profits around. So anyway, we looked at that as well, and these are sort of how it operates, and I'm sure it operates in a lot of other jurisdictions. Most VAT jurisdictions, actually, most sophisticated VAT jurisdictions have VAT grouping. But it's, as I said, over 35 years now, 3 commissions, it's been rejected every time. So I don't see it happening in South Africa in my lifetime, to quote some things. So just finally, what was the recommendation of the Davis Tax Committee? What did we recommend? Well, we, as I said, alluded to, we found the Australian reduced input tax input very attractive, and that was our recommendation here in South Africa. We kind of like said, definitely not in a VAT grouping, and the New Zealand one was probably worth looking at a bit further, but certainly the favoured approach of the Davis Tax Committee and the recommendation to government here was that we should explore more the Australian approach. So hopefully that's described the South African VAT financial services landscape, and certainly it's been interesting being involved, as I say, over these last 35 years with all the VAT changes that have taken place. And I hopefully we've given you some sense of where we are and where we're hoping we're going to be going. Thank you very much.
Thank you so much, Professor Des Kruger, for your overview of the South African VAT system, and also to learn about the review you have made on other systems, on the Australian, New Zealand, and UK VAT system. And now, moving on, I'm very curious to learn, to hear from Mr. Bernard Rappi, and to hear from him if and how these issues will be taken into account under the VAT that has been drafted for our banking, for our financial sector. Thank you so much, and thank you, Bernard.
Well, thank you. It's a pleasure to be here with so great specialists on the issue. Before I talk about specifically of the taxing of financial services, I'd like to talk a little bit about where we are now in Brazil in the discussion of the tax reform. In Brazil, due to the huge complexity of our system and due to the fact that consumption taxes are both federal, state taxes, and municipal taxes, we require for this reform, for the tax reform, a constitutional amendment. So what we are discussing now in Brazil is the constitutional amendment. Basically, the idea in this, what we are doing is to substitute for a single GST with a modern GST, the 5 current taxes, 3 federal, one state tax and a municipal tax. So basically the idea is that the design of the tax will be that of a modern GST. So we expect to have only one tax rate, although we are considering the possibility that both the federal government, the states, and the municipalities can change their tax rate. It means it will be only one tax rate for all goods and services, no exemptions in principle, but it can change between states and between municipalities. The collection will be centralized. It will be managed simultaneously by the federal government, the states, and the municipalities. So it's a national tax. It's at the same time a federal, state, and municipal tax. And the revenue is distributed from this central collection to the federal government, the states, and the municipalities. And we can do it respecting the destination principle because we have a very developed system of electronic invoices in Brazil, and that allows us to allocate the tax receipts for each of the, for the federal government, the states, and the municipalities. So that's where we are now, and we are discussing at this moment the constitutional amendments. There are some proposals that are under discussion in the National Congress. One of these proposals was created by our institution, our think tank. What we have today in Brazil regarding the taxation of financial services. In fact, we have three taxes. We have a federal tax that we call PIS/COFINS. There are two taxes that have the same legislation. That with a tax rate of 4.65%, we tax the gross margin of banks, including the spreads and the fees and commissions. But we don't have input tax credits. So it's a cumulative tax on gross margin, fees, and commissions. We have a municipal tax, ISS, that is a tax on fees and commissions of financial services, also with no input tax credits. It's a tax on turnover, and with a tax rate from 2% to 5%. And finally, we have in principle regulatory tax that we call IOF. It's a tax on financial operations that should be regulatory, but in fact it's not regulatory. It's for collecting tax revenue. And it's a very distortionary tax. We have many cases, but most of the tax receipt is on credit operations. We have a fixed tax rate of 0.38% on any tax operation, any credit operation in the disbursement of credit. Even if you have a credit operation with a zero rate of interest, you will be taxed. And another tax that it's increases during time up to a ceiling with many exemptions. The fact is that the system we have in Brazil is indeed very distortionary. We have many of the problems that you have, like not recovering input tax credits, and though the incentives that it gives for vertical integration, it's against outsourcing, and so we have many of those problems. In our tax reform, we have not defined so far how will the taxation of financial services be. We have seen what is the discussion around the world, and of course, we will not take the European system as a model. We know that's very distortionary, but we are considering, yes, the South African system. I mean, taxing fees, commissions, as a possible solution. And we would like to have a total neutral system, but as no country in the world so far has this system of taxing financial services, and as we are doing so many changes in our tax system, we are still expecting some country to have what is considered the best possible system for taxing financial services. So the discussion today was very interesting for us. We knew, of course, the distortions that we have, especially in Europe. That's very well established in literature. We know that at least fees and commissions will be taxed. We know that. But the discussion on how to treat the input tax credit, we haven't advanced very much so far. And we haven't advanced very much so far in how to treat services that are provided through paid through margins, especially interest in the case of credit and interest rates. So as we are beginning, we are starting from scratch with this new tax in Brazil, this new GST. Basically, what we are doing in Brazil, we will eliminate with a transition 5 current taxes and create a new tax, totally new from scratch for this, in the place of these 5 taxes with a transition of 10 years, because it has too many impacts on economic activity that it's basically impossible to do it at once. So we have to have a transition. Maybe it will be shorter, but the actual proposition is a 10-year transition. And what I would like to hear from you, both of you, is as we are starting from scratch, what would you recommend for Brazil to do regarding the taxation of financial services? This is not a matter for the constitutional amendment, so we can wait to the regulation of our GST, but certainly it's a very important issue in the designing of the Brazilian tax system. So what I would like to hear from you is what will you recommend? You are beginning from scratch. How we would recommend the Brazilian to create this GST on financial services? And thank you again for giving me the opportunity of participating in this debate.
Thank you very much, Bernard. Maybe before we go back to Giorgio and to this, maybe I would ask Décio for his comments. And I'm anxious also to hear Décio, to hear his impressions from the perspective of the banking market, from the perspective of the financial sector. How are you guys watching this, and what's your concerns? What do you expect from this new taxation model? Thank you, Décio. Décio. Yeah, I think you have to unmute.
Can you hear me now? Yeah. All right. No, thank you, Carol. First of all, it's a pleasure to share this panel with Professors Giorgio and then Kruger and Professor Bernard. I would like to thank ABDF for the invitation, and I would like to thank you as well, okay? So this is a very interesting debate, actually, right? So I would say that Bernard made my life very easier, I would say, because I would cover part of his, what he's presented. So basically, what is the taxation on the financial system in Brazil, and the pros and cons. But again, this is an interesting debate, and of course, we have been following this discussion since the beginning. We have been, following and discussing this matter with specialists, with externals, with scholars. So this is really a great, I think, opportunity for Brazil to move on, to be more aligned with international standards. Of course, this discussion brings some difficulties, some challenges, and not only challenges that we will face in Brazil, but challenges that all the world, I would say, is facing, depending on the model that they choose, right? So basically, we have heard, a professor that exposed, the VAT in Europe. And this is basically based on the financial sector is based on exemption, right? And we have heard, Professor Des Kruger that, brought the South African model, which is basically, I mean, taxing of, commissions, fees. I oversimplifying here, forgive me, but I mean, this is basically the difference in principle, and then we will, enter in more details in a moment. But I mean, this is basically the difference of these two main systems, and the question is which one should we adopt? The European, the South African, and then this is what I will cover here, right? So basically on the exemption, just, for everybody to be on the same page, I think, the VAT exemption for financial services may, evoke the image that banks are treated favorably as compared to, fully taxed businesses. But the fact that, banks cannot recover input VAT, whereas, fully taxed as business can, I think erodes this idea. So this is the first comment that I would like to say. So if we go to the South African model, first comment, I mean, this is idea of, taxing commissions, taxing fees, banking fees is not new. This is something that, uh, 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 many countries taxing commissions and fees. Uh, I can say that, South Africa does it, New Zealand does it, Australia does it, India does it, Singapore does it, China does it. So it seems that, I mean, conceptually, it's a simple question. Everybody agrees conceptually, worldwide. But I mean, this is, which seems simple, it's very complicated as well. So there are many challenges, I would say. The first thing is how, there are two questions that should, be answered here when we bring this model to the table, right? So what is a financial service? This is something that everybody in the world is discussing. So there are many doubts. I will give some, examples here. And second, how to implement this? What's what would be, the recovery of the VAT, the reclaim VAT, right? So this is, I mean, those are the two questions that I would like to bring. So far, so good.
Great, Decio. Thank you so
So
much. So
yeah,
I'm
yeah.
sorry.
So no, just to finish here, I would like to tend, I mean, to choose the second model. I mean, the South African aligned with, the IBS proposal, but certain principles should be observed, right? So this is, I mean, make the rule simple and clear. This is the first thing that we need, right? So neutrality, clarity, simplicity, transparency, and mainly legal certainty, right? So the new IBS should be neutral, meaning it does not increase the tax burden of our indirect taxation. So the new IBS should replace the current indirect taxes for the, the financial sector, as Bernard P. Mentioned, PIS, COFINS, and ISS. So these are reduce the asymmetries. I mean, neutrality, as I mentioned. So these are reduce the tax obligations. So these are the main topics that I would like to bring up to now.
Well, fantastic, Decio. Thank you so much. And the points you raise are extremely important. I don't know if Giorgio and this, they are familiar with the tax litigation and tax compliance problems we have in Brazil. I think that it's crazy. Believe me, it's crazy. So Decio is raising a very important point. We should have very clear the tendency we have for tax litigation, which is quite crazy. Before we get back to Giorgio and into this, Melina has asked me to make a few comments as well. Melina.
Thanks, Carol. Just a quick comment in regards to the Canadian model. I think you both may know, and because Canada, as Brazil, is a federation, so you have an additional problem. That is that here in Canada, we have different rates among the provinces. And this is an incentive for the financial institution to locate themselves in a province with a lower tax rate. This has been a real problem here in Canada, and maybe will be a problem also in Brazil. Because we have these different tax rates among the states. We will have that. The tax reform, the proposal is proposing this. So here in Canada, so they fixed this problem by not allowing the input tax credits are based, the input tax credits are based not on where actually the inputs were like bought, but actually they created a formula, a very complicated formula to allocate the input tax credits. So this has been really difficult here in Canada, and I think Brazil as a federation as well has to take into account this problem in the tax reform. I discussed this problem with API, and he's aware of this. And so just a quick comment about Canadian problems we have as a federation here also. Thanks.
Fantastic, Melina. So now we go back to our speakers in order to answer Bernard's provocation. What would you advise us as the best model to be adopted in Brazil? What would be your advice? And the points that Décio raised are very, very important for us, like how to do it in a clear and bringing more certainty to your system. And great to hear about the Canadian experience as well with Melina's comments. So I will ask Giorgio to firstly make his comments, and after that I would ask this to make his comments.
Okay, thank you, Ana Carolina, and thank you to the commentator, to Bernard and Décio for their comments. I mean, coming to the first comment from Bernard, I mean, he mentioned if the European system, European value-added tax system, would be recommendable to adopt for Brazil. I definitely say no. I mean, for a bunch of reasons, I would say. First of all, I mean, we are, as I pointed out during my presentation, we are right now right in the middle of a possible reform. It could end up in nothing, as it was the reform that it was before. And I didn't mention, but there were carried out several studies during the previous year. Also at the beginning of the 90s, there was a report called the Poddar report. And also that report suggested to move to a taxation system. Anyway, and also there are historical reasons, meaning that our model, our VAT in Europe was one of the first introduced across the world, and so he has he has come out. He has some age, he has 50 years of adoption. So I mean, as a new way to implement the VAT system for financial services, I strongly would say just not to follow the current VAT system that is in place in Europe. And also you have to consider that basically the problem relates to, it seems to me the major problem relates also to the definition of exemption. Because, I mean, try to, conceive when you put in place, there is also the same problem under tax rule, that when you try to define something, this something somehow, at some point in time changes. So you have to, try to develop this kind of, to revise current, from time to time, this exemption. And for sure, if you adopt the European VAT system as it is now, basically you start already with a system that is not up to date. So I definitely would suggest not to follow the current European value-added system. Maybe it's worth waiting, some years when hopefully the new system, if a new system will be implemented in the European Union. And coming instead to the question from Decio, is exemption, a good thing for a European value-added tax system? Well, it reminds me, a couple of sentences. One of which is given by the other actually PhD supervisor that I was lucky to add, who is Professor Van Hilten from the University of Amsterdam, and she said basically. VAT is a paradox. Why is a paradox? Because those who believe that are exempt are in fact taxed, and those who believe that are taxed are in fact exempt. This is the caustic view, I would say, of the value-added tax system. So if you are exempt under a VAT system, you are not lucky. You have you have a problem, and this problem is called input VAT deduction. If you are a business, of course, this is beneficial for consumer, because as a consumer, you benefit from a services where you buy something at the supermarket, you pay VAT, although you pay a VAT usually at a low rate, so at the very lowest rate of VAT, for instance, in Europe in Italy is 4% currently for a foodstuff, but you are able to acquire a services VAT free. Although, the price could be passed on by the business to the the VAT, not deductible VAT component could be passed by the financial institution in the price that is charged to you as a customer. So, you benefit, but not so much maybe. And as regard also, I understood that under Brazilian system, there are currently many taxes that are enforced over financial institutions. This is a point that I actually did not mention during my presentation, but we also have under the current European value-added tax system other taxes that apply to financial institutions and financial services. For instance, stamp duties, and when you raise capital, also from to set up a company, and also there were discussion about the possible introduction of financial transaction tax that they finally decided not to introduce. So far, and I forgot to say the other statement. The other statement about the exemption and how to understood exemption under the value-added tax system is the famous sentence from the creator of the value-added tax system, Maurice Lauré, who says that actually the exemption are the cancer of VAT. So, because they basically go against the very reasoning behind a value-added tax system, which is to tax only final consumption. And of course, by exemption, you ended up taxes businesses, not only final consumer. I think I think maybe maybe my contribution is to say that, you know, the value-added tax system as it is right now in Europe as regard the treatment of financial services is not worth copying by anybody, by any other system in the world. So that's my contribution to the discussion under the Brazilian system. Thank you.
Thank you, Giorgio. Des, please.
Yeah, it's interesting because we came to that same conclusion in the Marga Commission many years ago, not to follow the EU VAT system. I think there's a couple of things. One is I don't think you're going to get away without exemption. You know, as Bernardo says, you know, if the rest of the world's doing it, you've got to ask yourself, you know, are you going to be the first one and type thing? And that's why when the Marga Commission came out with the additive type of value added tax, which really works very well, obviously, in the financial services environment, because you're not looking at what the sales are, you know, what your sales price is. You're looking at your internal cost, what makes up your value added, and you tax that. So it would have worked very well, but certainly government, and I was in government at that stage, we looked at it and we said, no, hang on, we don't want to be number one. So I think the starting point is going to be exemption. The second question is, how broad must that exemption be? Well, as we demonstrate in South Africa, the New Zealand one, which to my mind, and you know, all systems subsequent to that, with all due respect, are what I call New Zealand clones. They have very much the characteristics of the New Zealand system. You know, it's called goods and services tax, but a value added tax by any other name. So there's the list. How do you define those exemptions? And we followed very much word for word, as I say, the New Zealand legislation, because it sounded to us like it was right. And yet when we sat as the CATS Commission and we looked at it and we said, but hang on, these things don't look to us like they should be financial services, and the fees should be taxable. And I'm not going to get into debate with DCO about whether South Africa was the first ones to do the taxation of fees, commissions, etc. But we looked and we said, but so the list of financial services relative to the New Zealand legislation at that point in time and around the world, we narrowed. The next thing is we decided to tax commissions and fees, etc. Because if the argument is, you know, how do you get to a value? How do you get to consideration? Well, there's the consideration. Nobody can argue about that. And in fact, the fact that in 29 years of value added tax, we've had two cases dealing with financial services, and both of them are around exchange of currency, interesting enough, and nothing complex about the application of this in practice indicates that we've got it right. You know, and so I'm sort of like quite happy with where we are in relatively in South Africa, of saying we can't tax all financial services properly. And DCO pointed out something that I used to love, especially when you're acting on a commission and people are saying, you know, you get all these representations, we want exemption. And I'm saying, do you understand what exemption means? Is that you're going to pay tax. You know, the best is zero rating, the next best is standard rate. The worst thing you want to be is exempt. So yeah, exemption is a given, I think. I think you need to limit it, and I think the way we've limited it has been very efficient, given the, and I mean, as I say, I was in the revenue service here for 12 years as well, etc. My battery's running low, so I'm just going to move to the other office. Then in relation to, you know, the other issues raised, you know, how do you do it on when you've got a federal system? We were very fortunate, obviously, in South Africa, in that we only had one, you know, state as such, and effectively, much like you were mentioning now, Bernard, the provinces, we have a provincial system and a very strong provincial system, but they get grant funding from the central state. Okay, so we make sure that we've only got one system and one thing. And Melina mentioned about the Canadian system. At the time, we also looked at that as well. What was interesting to me is that thing where they try to harmonize, the so-called harmonized system. But you can harmonize the base, which is great. And I've been on lots of other commissions where we've looked at introducing specific other taxes for the provinces, because they, in terms of our constitution, they're entitled to raise certain taxes, and at the municipal level, and I've worked on both. And in every case, what I've proposed is that we piggyback it on what's there, the existing definitions, collection functions, and everything else, collected by the South African Revenue Service and then paid over to us. Okay, so it's not a grant, it's a tax that we've imposed as province, but it's collected and we're using the same income tax base, or we're using the same value-added tax base. But it's got to be the same base. You can have a different rate, but then you have a problem that Melina said, and that's tax competition. And when I was in America, and as I said, at that point in time, we had sales tax. I spent a lot of time looking at the sales tax there. It was a huge issue because of the provincial, there are state taxes and local taxes there. There's tax competition where some states have none, others have 10%. It's a huge incentive. So if I had to make any recommendations around a federal system, is that you have one single base, and it's harmonized in the sense that everybody pays the same. You can't have different rates. So you could have a federal rate of 6, 8, 9, 10%, and a provincial state tax of 3%, and a provincial municipal tax of X. And in South Africa, and I'm not sure if it can happen there, when I was looking, assisting the Western Cape, where I reside, with looking at their potential tax base, we could actually say at what level, because we know where the VAT was collected. So there were some issues where you had a head office sitting in outside the Western Cape, where it would account for its VAT. But it was a simple thing for them to say to us, well, it relates to X number of sales that took place in the Western Cape. So we were comfortable, and in fact, we got as far as approval from the central government to impose a tax on that basis, using their definitions, not trying to change anything. Because the South African Revenue Service is going to collect on our behalf and charge us 2% for that service. But that's the only way you can do it. I'm sorry, in my view, after 40 odd years in tax and at the coal face, both in policy and in application. So that's my response.
Fantastic. Thank you so much. Well, we have enough challenges and to spend like many hours here talking about this subject. Then we have a lot to learn with you too. We learned a lot today. We have much more to learn, but unfortunately, we're getting close to the end of our meeting. And I would like then to ask the four of you if you would like to make any concluding comments. Maybe starting with Bernard. Would like to start, Bernard?
Okay, well, thank you. I think it was a very interesting discussion. I'll only like to say to Giorgio that we are not considering the European model in Brazil, okay? That's basically discarded. I mean, not only for financial services, for all the VAT, GST, and also say to Des that we are considering an harmonized and in fact only one tax base for the federal government, states and municipalities. Not only that, we are proposing that the collection is unified. You don't have a federal collection, a state collection, and a municipal collection. So it's in this case we are quite we go in the direction you are suggesting. As we said, in what regards financial services, we are still discussing what we should do in Brazil. I think that Décio made a very important point. It's very important, especially in Brazil, due to the level of litigation, of litigation we have in the country, to have a very clear statement on how should financial services be taxed. Otherwise, it's certainly that we'll have an enormous level of litigation because that's why Brazil works. So, unfortunately, in fact. This is very important for us. As I said, so far, we are in principle proposing a system close to that of South Africa, taxing all the cases in which the consideration comes in the form of fees or commissions or things like that, or it's where it's very easy to identify the consideration with some technical issues that we have to solve. But we still have the question of how to handle in the cases in which the consideration is a margin, and especially how to handle the input tax credit. Will it be proportional to what to the share of the revenue that comes from taxed services, or will it be a different system like the system in Australia? And we are discussing in Brazil, in the case of insurance, to adopt a system of cash flow. I think that Australia has a system that uses a cash flow system for insurance. It works. It's possible to do. It's much easier to implement than the cash flow system for credits. It will be much more difficult to implement. So in this case, we are considering that possibility. But as I said, it's not a final design. It's where we are in the discussion. And it was very important to have this debate today. And maybe through Medina, I'll look for you maybe someday to ask for your opinion or some possible designs on taxing financial services. It's not a problem for today, but it certainly will be, if we approve the constitutional amendment, it will be a problem for next year. So that's where we are here in Brazil. And thank you again for the opportunity of having this debate.
Thank you, Bernard. Décio would like to make a few concluding comments.
Sure.
Firstly, thank you very much once again for the invitation. VAT is my passion. I'm known as Mr. VAT in South Africa. It's definitely a passion. And the tax design is always interesting because, as I say, I haven't been involved as advisor to 3 of the commissions. You look around the world, you look at best practices, and at the end of the day, you try and do the best. And you don't always get it right, but certainly where we are in relation to VAT, the so-called modern VAT system, I think it's, we don't see a lot of VAT litigation in South Africa. I noticed there is still quite a lot of litigation in New Zealand, for instance, which I follow closely. But it's certainly in South Africa, we've had very little VAT, and it's usually been in relation to cross-border issues where people are looking for zero rating. The whole thing around fees and commission, that sort of stuff. In fact, the banking sector and the financial services sector welcome it, in the sense that it increases their ability to claim input tax in terms of their apportionment ratios and that sort of stuff. So what we in fact find is very often, if there's a business-to-business arrangement, that people would be negotiating that. So they'll say, I can charge you interest, or I can charge you interest plus, or if I'd reduce the interest and charge you a fee. So an availability fee in the banking sector, for instance, in the old days, they used to just charge you, we're going to charge you a little bit more extra interest. Now they charge an availability fee. So you'll see that there's, it's not something that the financial services sector necessarily avoid if they in fact favor the fee thing. If it's a business to business and they know that that their input tax credit can be passed on. So it kind of like enhances in that. And what I found attractive about the Australian system was that it addressed, there's no perfect system, but addressed to a large extent the concerns of the financial services sector around double taxation or tax cascading and VAT sticking and vertical integration. It really did address it to a large extent. So we found it as a commission very, very attractive, and I hope we give it some thought. I would just obviously design financial services our tax interest, but that's me. Cash flow is quite an interesting one. I think it's Pody is the great proponent of the cash flow model. And I'm not sure that I know of any place that's adopted it, but certainly there is some attraction to it from an intellectual perspective. But just thank you very much. And Bernard, I'm happy to help out or give you inputs whenever. I'm a semi-retired now, so I'm on the farm at the moment. So yeah, just give me a shout. I'll be more than happy to help out. Thanks very much.
Thank you so much, Des. And now I would ask Décio to...
Sure. Thank you so much again. Thank you for the invitation. Thank you for the opportunity. I think my last comments are the following. Actually, just taking one and highlighting one specific point that Bernard just mentioned. We should seek in Brazil the reduction of litigation, right? So we should reduce litigation, not increase litigation, tax litigation in Brazil. This is very important. And again, we have a good opportunity to discuss this, having a very clear rule, simple rule that will achieve this objective, right? So the impact on the financial sector presents, as you know, some operational difficulties, given the distinction between revenues and commissions and banking fees from revenues from financial transactions. In services which remuneration occurs through commissions and banking fees, the levy of tax integrity would not demand great difficulties for interpretation, right? So, but in relation to interest charged on credit transaction, it's not clear actually what exactly is the added value that would be subject to VAT taxation. So basically brokerage fee is easy, custody fee, easy, commissions is easy, investment advisory fees, it's easy as well. But I mean, when we take different natures or other natures of revenues, let's take derivatives. How to tax VAT on derivatives? Trading, derivatives trading cross-border, lending on commitment fees, which are lending that can be amortized over the tenure of the loan, financial trading revenue. So those are complex situations. Not only would be complex in Brazil, but it's complex in everywhere, right? So basically, my final comments on this again are the following. We should have a new tax that is clear, simple, is neutral, does not increasing, indirect taxation on the financial sector. I think the IBS should replace the current indirect taxes on financial sector, the PIS, COFINS, NISS. The new VAT should be restricted, in my opinion, to fees and commissions and not levy on the interest of financial revenues. This is very important. Brazil should not be, the first country in the world to test something that haven't been tested or proven yet. This is probably would, increase the cost of the banking credit, would maybe impact the economy, would create more litigation. So again, we have a good opportunity here to have a new and good law, right? So a suggestion, not a recommendation, but my view is let's try to make the new IBS rule clear and simple, and think how the credit mechanism is going to work, and make it simple as well. So all the discussions around the world, if you take models of credit mechanism, comparing India and Singapore against other countries, are basically they're focusing on the credit mechanism that is bringing a lot of doubts and complexity to the table. So those are my final comments. And again, I would like to thank you all for the opportunity, to share this panel with you. And I am at your disposal as well.
Thank you so much.
Can I just have maybe respond to one issue? And I think it's so important, and I overlooked it, and I had just jotted down here. The most amazing way to avoid litigation, and as I say, having been on both sides of the field for quite some time, is the banking, for instance, the banking association and the insurance industry in South Africa sat down with the revenue authorities, went through every type of transaction they could think of, and we knocked out to a consensus as to how each one of those was required to be dealt for. So there's like a 15-page document that was signed off by the Banking Association, for instance, and the South African Revenue Service, which was agreed on every one of those things, how they should be dealt with. So there's never been an issue. You know, to the extent a member wants to argue differently, you know, they're brought back into line. And this has been consistent in the 29 years that we've had VAT now. And as I say, and the way to do it is you have that discussion with your revenue authorities. And like I said, also with the apportionment ratio, there was a standard method that everybody had to use. The banking sector came to us and said, look, it doesn't work, demonstrated to us why it doesn't work. And we agreed an apportionment system. So we've had no arguments with the banks around what's taxable and what's not. And we've had no arguments with the Banking Association as to what the apportionment ratio would be, whereas it's a big deal in other sectors, apportionment. Okay, thanks very much.
I mean,
thank you for this, Giorgio.
Yeah, I was about to make pretty much the same comment that Des just raised to reply to this your concern, and also how to avoid as far as possible litigation as far as possible. I mean, we do have in Europe a kind of pilot project. It's called for cross-border ruling. So enables to bring business and tax authorities of 2 member or more member states at the same table and to agree in advance on the VAT treatment of a transaction. So I think that in general, advance ruling could be also a way to avoid litigation. And as Des mentioned before, another, possibility in this regard is also the provision of guidelines that or explanatory note that although they are not binding, they may be helpful to provide a kind of safe harbor to business and also to avoid the litigation in the end. So just this comment. Thank you.
Well, thank you so much to all of you, to those who were with us in our YouTube channel. So on behalf of ABDF, on behalf of IFA Brazil, I thank you all of you for your time this morning. Hopefully this issue will evolve. Hopefully we will have other opportunities to keep talking to you guys and learning from you. So thanks a lot.
Thank you very much. Thank you very much.
Thank you.
Thank
Have
you.
a nice day. Thank you.
Bye. Thank you.